Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to the channel, everybody. This is day 5 of our Trading for a Living series. Welcome back once again, everybody. Today, we'll be looking at the hidden secret behind candlesticks. And if you're a beginner and you are watching me, please pay much attention to this very particular video. And if you're not a beginner, but you have been trading for some time, but still not making any profit in the market, pay much attention here too. Because this is going to be the beginning of your technical analysis skills. You're going to learn a lot about candlesticks. We'll cover all the components that makes up the candlesticks and what they mean, the story they tell on the chart, how to read the story on the chart, and how to analyze and trade with them. This video is very important because, as I said, it's going to be the very beginning of your technical analysis skills. So if you don't understand anything, any of this concept discussed in this video or any of the previous videos, feel free to email me at daytradeforliving@gmail.com. But before we move any further, please like, share and subscribe to this channel to anyone out there to be able to access this video. I actually spend a lot of time on these videos just to put it on YouTube for everybody to benefit from it. It's very time consuming to make YouTube videos, so I always prefer holding webinars and seminars instead of just getting involved with YouTube videos. But my wife, who always pressured me to also help the young ones out there or any beginner who's struggling, okay? But for your sake, I have to spend extra time to make this video, so please like and share and help to grow the channel, okay? Okay, without further ado, let's get started. In one of our previous videos, we discussed that day trading is the act of buying and selling of securities within a trading day. We learned that these securities are presented on a graph. We also discussed that as a trader, we don't buy the physical assets, but we buy the data behind these physical assets like businesses, like commodities, currency, or metals. We already know that data behind these physical assets are represented on a graph. And the graph contains candlesticks, bar charts, or line graphs. So in this lecture, we will only be focusing on candlesticks. Candlesticks is the most important and popular detailed graph representation we have so far. So almost every professional trader uses candlestick to trade. And since you are following my steps, then I'll encourage you to also trade as I do. Follow my steps and I'll let you become profitable in 90 days, okay? Just follow what I tell you to do. Line charts are very difficult to trade with because they don't give much details as candlesticks. Bar charts are very complicated and they don't look interesting as candlesticks. So we as day traders, we mostly use candlesticks to trade. It gives you much information we are going to cover in this lecture, okay? So don't focus on line charts, don't focus on bar charts, forget about whatever you see out there, focus on candlesticks, okay? Because candlesticks give more information that line charts cannot give you. Once in a while, we will discuss something about line charts, but our main trading graph representation is going to be the candlestick, okay? So just follow my steps. Most people go through 2 years, 4 years, or even 6 years and still not become profitable traders. Why? It's because they are not following the right path, they're not learning the right things, and so they keep roaming and they keep losing all their money to the market and they still keep messing around. What kind of life is that? You keep losing and you keep trading and you don't learn the right skill required. Guys, are you guys serious at all? You keep losing and you still keep trading and you don't learn the right skill. You don't ask yourself that, is something wrong? Is something actually wrong with what I'm doing? And you still keep losing and you still keep trading and you still keep losing your money, and you borrow money from your friends, borrow money, you go to your pension pay, your pension fund, you borrow money from it, you go to your insurance company, you take money from it. Guys, it's time to be serious, okay? I don't want to talk that much, so let's move on. So back to candlesticks. Candlesticks originated in Japan over 100 years before we in the West even got to encounter it. Candlestick shows the emotions by virtually representing the size of a price movement in different colors. So we as day traders, we use candlesticks to make decisions. We use candlesticks to make buy and sell decisions based on regular occurring patterns, and it helps us to forecast the short-term direction of the price. So let's talk about what actually makes up the candlesticks. Just like we humans, we have head, legs, body, and so on, right? So as candlestick also does. A candlestick has a body, a wick, opening price, closing price, And these are the features that make candlestick unique from any other chart representations. So candlestick also have the open and the high close, the open, high, and the close of the price. So we use this information to read what is going on in the market. The candlestick will tell you the story of the market. So you must know what each of them means. Okay, so candlestick have the low of the price, the open of the price, and the close of the price. Many people begin trading and have no idea behind candlesticks. And I wonder how people can be very ignorant. Let me give you a scenario here. Imagine you travel from your country to a different country, and in that country they speak different language. With no idea of what their language mean, can you survive? Is it possible to survive in that particular country or that particular land? It's a big no, right? Can you even go out and buy water or food? Which language are you going to speak to them? And even if they speak, how are you going to understand? So you find it very difficult to live there, and you not become successful living there, right? Same as in trading. Candlestick is the language of the market. So you must understand the characters, the symbols, and the signs, and the words of the language. That's all. Candlesticks are read just like reading any other language. Different candlesticks put together tells different words, and different words tell different sentences, and different sentences tells different stories. So you must understand the language of the market before you even enter into this business. Okay? But once again, have you seen that up to now in this sales video, we've not talked about how to buy and sell? Yes, because it's not time yet. So you see how stupid you would have been if you would have just begin trading and without any of this knowledge and you keep losing your money, right? That's why they say that 90% of all traders fail. Because why? Because they are all blind. They don't know what actually they are doing. So my fellow students, don't fall into that circle. If you want to become a full-time profitable trader as I do, just follow my steps, okay? So now that we understand what candlesticks really are, it's time to learn how to read them. There are types of candlesticks, but these candlesticks can be grouped into two: bullish candlesticks and bearish candlesticks. The color of the candlestick does not matter. We discussed in one of our videos that the color, the size, the style of the candlestick can be changed at any time, right? Or can be customized to suit your own preferences. So don't focus on the color, but focus on what kind of candlestick it is. So here you can see we have this full body candlestick, right? It has some small lines around it. The small lines are called wicks. Wicks. We will discuss wicks later. This is another full body, but on this chart it's only black and white chart, which means that white means we are going up, it's a buy signal. Black means it's a down candlestick, okay? So you can see that we have a big full body, we have a big black candle, which is a big bearish body, right? Good. We have a doji. This is called a doji, which means it has more wicks and a small body. We have dragonfly, which means it has a small body, but the body is at the top, very small, and has a long tail. These tails are the wicks. And how are they formed? You see, when a candlestick begins to develop, it moves up and down. Prices move up and down, up and down. So let's assume here's where the candle opens, right? Here's where the price opens for that particular time frame. If you're trading 1 hour, which means this 1 hour candle. If you're trading 15 minutes, this is 15 minutes candle. If you're trading 5 minutes, this is 5 minutes candle. If you're trading 4 hours, this is 4 hour candle. So the price open here, and now see what happened. The market begin to rally, come down, rally, come down, rally, come down. It means it went all the way down here. The market was also able to go all the way to the top here. Can you see? But it closed here. So the candlesticks has wicks to show that okay, the market was able to travel all the way here, but it could not stay there. It was able to travel all the way here, but could not also stay there. So it opens here and it closes there. That's why we have wicks all over. Okay, so that's what wicks means. So we have a dragonfly, we have gravestone doji, and a whole lot. Don't focus on the name, just focus on what kind of candlestick it is, because people have different names for it. When you search online, you get a lot. Just search on Google. Google is your friend, okay? Just search on Google, you can find a lot of information and a lot of this candlestick. But what do they actually mean? So focus on what kind of candlestick they are. So we have the hammer. Why is it a hammer? Because it looks like a hammer, right? So we just give it the name hammer. We have the spinning top, the shaving head, and a whole lot. So focus one thing here. We have all these candles here, but what do they represent? And what is the meaning behind them? To understand the meaning behind them, you must understand how a bullish and bearish candlesticks open. A bullish candlestick opens from the low and closes at the top. You see, it opens from the low of the candle, closes at the high of the candle. So a bullish candlestick represents upwards movement, which means buyers, they started buying here and they push the market up. A bearish candlestick opens from the top and goes down. It represents downwards movement in the price of commodity or a stock. So buyers begin to buy and sellers take the market down. So buyers buy for the market to go up, sellers sell for the market to come down. So with this understanding, it means that buyers and sellers all have a way to trade, right? Good. So as a trader, you can either be a buyer or a seller. So you can be a buyer at the moment, the next minute you are a seller. You have to decide which direction you want to go. If you want to join the buyers, you join the buyers. If you want to join the sellers, you join the sellers. So you can see that some of these candles have full body, right? Full body. Some of them also have small body. So what does it mean? Note this. If the body of the candle is much closer to the top of the candle, it means that buyers are pushing the market up. So this is the closing price, or maybe the opening price is somewhere here. It means the market travel all the way here, but buyers push it up. So it's like they are holding it, right? So it means buyers are pushing it up, which means the body of the candle is closer to the top of the candle. If the body of the candle is closer to the bottom of the candle, or this one, which means sellers are pushing the market down. They are compressing the price. They are pushing the price down. So just keep that analogy in your head, okay? They are pushing the price down. If the body of the candle is in the middle of the candle, which means that both buyers and sellers are all strong. Both of them are pressing the price, which means the price becomes very small in the middle. So they all have equal strength in the market, which means the market can move anywhere from there. So we can't make decisions based on candles with body in the middle. Okay. So all this information is irrespective of the color of the candle, because as I said earlier, the color of the candle can be changed. But by default, we see green candles to be an upward move, or maybe white candle to be for bullish or upward move. And then we see black or red candle to be a downward move. But the color does not matter. Somebody can change it to become blue and yellow. Somebody can choose magenta and green, anything. Okay, so don't focus on the color, but focus on what kind of candlestick it is. Okay. So now you see, with this understanding, you can read the language of the market better, right? That's why you must master candlesticks to be able to understand what the market is actually trying to tell you. And assuming you don't understand my language I'm speaking now, right? Assuming I'm speaking English, you don't understand English. Would you have been able to watch this video? You wouldn't even understand. You wouldn't even dare to watch, right? Because you don't understand whatever I'm saying. But because you understand my language, you understand that I'm speaking English and you also understand English. So you're able to understand it, right? That's how market is. So you must understand the language of the market. You learn the language of the market. So you know what the market is trying to tell you. Either to buy, either to sell, or stay out of the market. That's simple, guys. So what's the market? So you must understand whatever the candlestick is trying to tell you, the story market is telling you, okay? So don't be in a rush. Take your time. Study this candlestick, because this is the basics. These are the basic characters, okay? So now that you understand the basics of candlesticks, then what next? The candlesticks are like the English alphabet, like A, B, C, D, E, F, G, H, and so on. So they are like the individual characters we see here. Like you see, what do you see here? You see secrets, right? So you see S, E, C, R, E, T, E, S. These are individual characters forming a word. So the same way, so in trading, the candlesticks are like the alphabets, right? They are like the alphabets. And what do you use the alphabet to do? You use them to form words, right? So the same as candlesticks. Candlesticks are the alphabets of the market language. So for now that you know them, it's time to learn how to form words with them. And words have meaning, right? So like the way you can form a word, secrets. You can see data. You can see graph. So the same way, candlesticks also form words. But in trading, the words of the market are called candlestick patterns. They are called patterns. You see? So candlestick patterns are the combination of two or more candlesticks just to tell a word. There are two candlestick patterns and there are also three candlestick patterns. Candlesticks patterns are a lot, but I'm teaching you the only one I use to trade as a professional trader. So if you like, you can also search online for more. But look here for the meantime. Look here. You can see in this particular pattern, see, it's called bearish kicker. The name does not matter. What matters is the kind or the style it is. The name doesn't matter. Somebody can also call it different name, okay? So we can see that there is a bullish candle, which means this green candle represents bullish candle. I said the color doesn't matter, but here they are using green to represent bullish and red to represent bearish, okay? So there was a gap between the two candles, right? Here there's a bullish candle, which means that the market opened here and closes here. But instead of the market to continue from here to go higher or even continue from here to come down, there was a gap, which the market came here to open here again and sold down, which means there's a gap, there's a big gap here. Have you seen? There is bullish engulfing candle. One bullish candle. This is a bearish engulfing. One bullish candle and there's one big bearish candle, which means a downward movement. There's a dark cloud. See the pattern. See guys? You see bullish candle. There's a bearish candle, which means what does it actually mean? See, which means the bulls try to push the market up, right? After they push the market up, what should happen next? They should continue to push the market up, right? But when they were pushing the market up, they go to a point here and bears step in and they push the market down. See, they push the market down all the way through the half of this candle. That's why it's called dark cloud. The name can be changed. It doesn't matter. Just understand what it means, okay? Understand what it means. There is a tweezer top. So tweezer top, what does it mean? See, I explained that bullish candles, they begin from the down and they move upwards, right? So let's say there's a candle. So bulls decide to move the market upwards. But when they go to a point, the bears step in for this first candle. The bears step in, those who are sellers, they step in and they sold almost half of the candle. After that, the next candle, the bulls try, look at there is a wick here, right? If there is a wick, it means the price traveled there, which means the bulls try to also push the market back again to where the bears took in, the bears took charge, but still, the bearish market continue on. The sellers still continue to sell. So they sold and they sold and they sold, and the price closed here. It's called tweezer top. So you understand the meaning behind it. You understand how we read the candlesticks. Let's see this one. This is also bullish engulfing candle. Bullish engulfing means that, see, there is a red candle, right? And we are using red candle right now to represent selling. We are using green candle representing buying, right? Good. The color can be changed, guys. So let's see. Bearish candle means that the sellers were trying to sell the market down. But when they sell the market down, bulls took over. When they took over, sellers tried to sell the market down again. But the bulls took over and they bought the market and they sent the market upward to overtake this candle. It's called bullish engulfing candle, which means that the bulls have engulfed the bears. You see, if you engulf the bears, so buyers are overtaking the sellers. At this particular moment, we have morning star. Why is it called morning star? What is morning star? Morning star means there was evening, right? Good. And now it's about to be dawn. So which means sellers were in the market in control. Now there was indecision. Indecision means that both buyers and sellers were all strong in this particular moment. So if this is 1 hour, which means with this 1 hour, both buyers and sellers were all strong. So the price is in the middle. If it is 30 minutes, it means both buyers and sellers were all strong within the 30 minutes. If it's 5 minutes, it means both buyers and sellers were all strong within the 5 minutes. So they were all strong, and what happened is the bulls took over and they sent the market upwards. So now it's in the morning, right? That's just simple. So that's what the name just tells. But the name doesn't matter. So here it shows that we are going upwards. This is a pin bar, or some people call it hammer. So why is it a pin bar? See, this is a bearish candle. It's red, right? Which means the market came all the way, traveled all the way. Whatever there's a wick, which means the market has traveled there. The market traveled all the way down, and the buyers bought the market back again. So they pushed the market up, 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 up. And here they took over again. Can you see? They pushed the market up, up, up. Here to the same thing. The market came down, the sellers sold, and the buyers pushed it up. So which means buyers are more in control. Can you see? So it's called pin bar. There are lots, guys. We can't discuss all. This is the reversal. This is a bullish engulfing. When you reverse it in the downwards, it's called bearish engulfing. The same theory applies here. This is a evening star, which means now it was in the morning. We just see it's in the morning. There was a star, and now sellers are taking over. So it's darkness right now. That's what we just represent it with. Okay. The same. So here are the bullish patterns, and here are the bearish patterns. Okay. The same thing here. When you reverse it, you get it down here. And all these ones mean different things. So you must understand how to read all these ones. Okay. You must understand each of these ones. So take your time and read them one by one and understand the concept, okay? So guys, so far we've covered a lot in this short video. You've learned the alphabets of the market. You've learned the words. The next thing to learn is how to construct sentences and more better words. So in our next lecture, we will be covering how to read and understand chart patterns created with these candlestick patterns. Okay, so before our next video comes, please take your time, re-watch this video again, play it as much as you can, and understand all the basics discussed here, because if you don't grasp the concepts here, the next video you can't catch up, because we are going to combine these ones to form patterns, and you'll not be able to understand because you don't really understand what a bullish engulfing is. You don't really understand what a bearish engulfing is. You don't understand what a pin bar is. You don't really understand the concept behind it. Why is it a pin bar and how did it form? So you must learn and understand how all these things form. As I explained to you, let's take this one for example. So this one, who can explain this one to me? This is a bearish pin bar, right? So what happened? What happened on this candle? You have to ask yourself those questions. What actually happened here that we got this candle? It means that this is a bearish candle and it's red. It's red means that, although the color doesn't matter, but here we are using red to represent a downward movement, right? It means that red candle, what's the rule behind red candle? Red candle means that the market opened where? Above, right? And closes below. That's what red candle means, which means this market opened here. This was the opening of the market. After the market opened, it came down a little and bulls took it up, which means buyers stepped in. They bought the market all the way up here. But still, bearish did not allow them to do that. So the sellers stepped in again and they sold the market past the opening price and closed below. That's what it means, guys. That's what it means. This candle, what does it mean? It's green. It's green means that the opening must be below and the ending, the closing must be up, right? That's upward movement. So let's see. It means that the market opened here. Bulls were trying to put the market up, so they put the market up. But the sellers stepped in. They stepped in and they sold the market all the way and closed here, which means that the sellers are in control in this particular candle. So guys, you see how we read the candlesticks. So take your time, read them one by one, understand them one by one. Okay? So that will be all for this video, and before we leave, like as I said, subscribe to my channel and help grow the channel, okay? If there's anything you don't understand, as I said earlier, don't keep it to yourself. Feel free, email me and I'll reply you in due time. This is Oas, your trainer for this entire series. See you in the next lecture. Goodbye.